In the rapidly evolving world of global finance, the ripple effects of Saudi Arabia's recent decisions regarding its oil trade policies are making headlines around the world. The transition from the long-standing tradition of selling oil exclusively in US dollars to potentially embracing the yuan among other currencies signifies a pivotal moment not just for Saudi-US relations but for the entire global economic landscape. This shift, often highlighted in the latest geopolitical headlines, could very well signal the end of the petrodollar system, a cornerstone of US financial dominance since the mid-20th century. You are watching Global Reference News. Please like, share, and subscribe. To understand the severity of the current matter, let's first examine the genesis and history of the petrodollar itself. The concept of petrodollars emerged in the mid-1970s, a term that describes the US dollars earned by oil exporting countries through the sale of oil. This period was marked by significant geopolitical and economic shifts. Initially, the Bretton Woods Agreement of 1944 had established the US dollar as the world's primary reserve currency, linked to gold, which facilitated international trade and economic stability post-World War II. However, the landscape changed dramatically in 1971 when US President Richard Nixon ended the dollar's convertibility to gold, leading to floating exchange rates and increased currency volatility. In response to US support for Israel during the Yom Kippur War, the Organization of Petroleum Exporting Countries, OPEC, imposed an oil embargo in 1973, causing oil prices to skyrocket. This crisis underscored the need for a stable medium of exchange for oil transactions, which led to significant negotiations between the US and oil exporting countries. The pivotal moment came in 1974 amidst an ongoing oil crisis, when the US and Saudi Arabia reached a critical agreement. On June 8, 1974, a deal was formalized whereby the US would buy oil from Saudi Arabia, which in return would denominate all oil sales in US dollars. This arrangement not only stabilized the oil market but also cemented the US dollar's role as the dominant global currency. Under this agreement, Saudi Arabia also committed to investing its petrodollar revenues back into the US economy, particularly through the purchase of US Treasury securities. This recycling of petrodollars played a crucial role in financing the US government's spending needs. Moreover, it facilitated a symbiotic economic relationship between the two nations, with the US providing military aid and equipment to Saudi Arabia, thereby ensuring the kingdom's stability. This arrangement marked the beginning of the petrodollar system, which significantly influenced global financial markets and established a long-standing linkage between oil sales and the US dollar. The system not only reinforced the dollar's status as the world's leading currency, but also shaped the economic and political landscapes of the participating countries. The decision by the Crown Prince of Saudi Arabia to not renew the 50-year-old petrodollar agreement marks a significant shift in international financial dynamics. The termination of this pact signals a strategic pivot towards reducing reliance on the US dollar and diversifying economic partnerships. This move aligns with Saudi Arabia's broader strategy to adapt to global energy transitions and economic diversification. Saudi Arabia's growing ties with BRICS nations, particularly China and Russia, have been instrumental in this decision. The inclusion in the BRICS bloc reflects a strategic shift towards nations that could potentially offer more favorable economic and political alliances. This diversification strategy is not only a response to the evolving global energy landscape, characterized by a shift towards renewable energy and decreased reliance on oil, but also an attempt to enhance economic stability by engaging with a broader array of global currencies. The Biden administration has recognized the importance of maintaining a strong bilateral relationship with Saudi Arabia. Reports suggest that the administration is nearing the completion of a treaty that would commit the US to defend Saudi Arabia as part of a broader strategy to encourage diplomatic ties between Saudi Arabia and Israel. This development underscores the geopolitical significance of Saudi Arabia's decision and its potential impacts on US foreign policy. Furthermore, Saudi Arabia's participation in Project Bridge, which explores a multi-central bank digital currency platform, indicates its proactive approach to embracing technological innovations in financial transactions. This project, which utilizes distributed ledger technology, could revolutionize cross-border payments and reduce the global economy's dependency on traditional currency systems like the US dollar. The immediate aftermath of Saudi Arabia's decision to potentially end the petrodollar system has introduced significant volatility into the global financial markets. The US dollar, traditionally seen as a safe haven currency, is now under scrutiny due to concerns about the stability of the US financial system, following the collapse of Silicon Valley Bank and other banks facing similar suit. This event has raised fears of a wider banking crisis, prompting the US Federal Reserve to implement emergency measures to stabilize the situation. Despite these efforts, the uncertainty surrounding the dollar's future as the global reserve currency persists, potentially leading to a slowdown in economic growth and a decline in consumer confidence. This scenario is further complicated by the potential for increased inflation in countries heavily reliant on oil imports, as central banks may need to adjust their monetary policies to stabilize their currencies. As countries like China and Russia, part of the BRICS alliance, begin to settle oil transactions in currencies other than the US dollar, we may see a more multipolar financial system emerge. Additionally, the diversification of currency use in global trade could lead to more balanced and diversified economic relations globally. However, this transition might also introduce short-term volatility in the oil market as traders and investors adjust to new multi-currency pricing structures. China and Russia in particular may leverage this to enhance their geopolitical influence. The unified push towards de-dollarization by BRICS could lead to wider acceptance of alternative currencies in international trade, challenging America's financial hegemony and creating a more balanced global economic landscape. Additionally, regional coalitions could develop their own trade agreements, further decentralizing global trade and leading to more localized economic policies, reducing the global influence of any single currency or country. Saudi Arabia's strategy to reduce its dependency on oil revenues and focus more on diverse investments is aligned with Crown Prince Mohammed bin Salman's vision to make investments rather than oil the primary source of Saudi government revenue. Diversification may target sectors like technology, tourism, and renewable energy. By moving away from recycling petrodollars into US Treasury securities, Saudi Arabia could redirect funds into financial markets and other global investments. This transition could affect countries that have traditionally benefited from Saudi investments, potentially leading to shifts in international economic cooperation. This will have devastating consequences for the US economy. In his recent book, Bonfire of the Sanities, December 2023, best-selling author and investment manager David Wright argues the strength of the dollar is a key factor behind America's high standard of living. Wright declares that the reason why people in the US enjoy as high of a standard of living as we do is because the dollar is strong. Wright then explains this strength is partly because of faith in our economy and because energy can't be bought without US dollars. Though the US could see such an event with a bleak perspective, China, however, has great prospects at hand should the petrodollar dissolve. As Zoltar Pozsar, New York-based economist and investment research director at Credit Suisse, put it recently, that's dusk for the petrodollar and a new dawn for the petro-yuan. Before you dismiss Pozsar's comment as an exaggeration, consider that other major OPEC nations and BRICS members, Brazil, Russia, India, China, and South Africa, are either accepting yuan already or strongly considering it. Russia, Iran, and Venezuela account for about 40% of the world's proven oil fields, and the three sell their oil in exchange for yuan. What this suggests is that the yuan's role as a reserve currency will continue to strengthen, signifying a broader shift in the global power balance and potentially giving China a bigger hand with which to shape economic policies that affect us all. Looking ahead, the future of the dollar and its role in international trade and reserves is at a pivotal juncture. As countries like China and Russia bolster their influence on the world stage, the potential for a more diversified global currency system grows. This evolution towards a world where oil trade is not exclusively tethered to the US dollar could lead to a re-evaluation of economic strategies and foster a more balanced global economic order. Ultimately, the decisions made now and in the near future will not only determine the fate of the petrodollar but also indicate the direction of global economic power shifts, highlighting the importance of adaptation and cooperation in the face of changing economic realities. So, what are your thoughts? Do you think the fall of the petrodollar will cause an international rift and collapse societies worldwide, or do you think this is what's best for the world to advance from out of the iron grip of the West? Share your thoughts in the comments section below, and as always, like, share, and subscribe. Also, be sure to visit us at www.globalreferencecnews.com for the latest headlines and news events happening around the world.